Hi, I'm Ray Armand, a chartered accountant, zero specialist, and profit strategist. And in this video, I want to share with you something that is so crucial for every business owner to understand. And that is that more sales, more revenue is not going to solve your profitability issues. If your business is experiencing issues with cash flow or profitability, just pumping more sales, more revenue is not going to necessarily solve that problem. So why is that? Why am I saying that? Because I've seen it time and time again. I've seen inside hundreds of businesses ranging in size from 20,000 turnover to multi-million pound businesses. And it's the same thing over and over again. If you increase your revenue without having financial structures and control in place, you just amplify the chaos, not the profit. Let's look at that in practical terms. If you are sitting with your business at anything above a 50,000 pound or dollar, roughly in that range, 50,000 turnover, so 50,000 a year sales or revenue, okay, so turnover, sales, revenue, all interchangeable terms that mean the same thing. That's stuff that you are selling, products or services that you invoice your customers for. That's your sales or turnover or revenue. If the level of your trading, so the level of your sales or turnover is 50,000 or more, so that's like $50,000, which is about roughly 40 something thousand pounds, so around that ballpark, you should be profitable. There is no excuse to not be profitable. It's very, very rare for there to be an industry where it's acceptable not to be profitable at that level, okay? So if you're listening to this, assume that you should be profitable, because that is what in the majority of cases. Now, what I am planning on doing with this channel up till now, I'm very much always focused on let's help business owners use zero. But what I am going to be doing going forward is, because when we start to jump into the space of how I can help business owners to understand the importance of profitability and be more profitable, which at the end of the day actually means all your hard work is turning into money in your bank account, in your business bank account, and then in your personal bank account, okay? That's what I want to help people do. But in order to do that, I need to niche into an industry that I can then really go deep on the nuances within that industry, okay? So the industry I am going to be focusing on more and more on this channel is in the course creators, digital courses, online experts space. But don't worry, I am going to continue to release also videos on zero, videos on generally how to make businesses profitable. But I want to highlight at this point that I will point out to you where it's advice that applies to pretty much all businesses versus advice that might apply to a specific industry like the digital course space. Okay, but for now, this video is very much relevant to you in 95, 99% of industries. And that is that you should be profitable as soon as your business, some might argue from day dot. If you're making 10, 20,000 turnover, you should be profitable. But I would say a good margin is about the $50,000 or about 40 to 45,000 pound mark. At that level, you should be profitable, and every single level above that. If you are at 200,000, you should be profitable. At $1 million, you should be profitable. There's no real excuse to not be profitable once you've got to that point of about 50,000. And if you are not, and you keep telling yourself, when I get more sales, when I get bigger, then we'll finally be consistently profitable, then you are fooling yourself. And the reason why I'm saying that harsh truth is because I've seen it time and time again. I've seen inside, like I say, literally hundreds and hundreds of zero accounts. I've seen inside so many businesses. And it's just scary how common it is for me to be looking at two almost identical businesses, both turning over, let's say, 200,000. One, the business owner is 100,000 of that, so 50% is a profit. The other they're earning barely minimum wage, if anything. They're barely taking anything out of the business. And it's down to the decisions they are making. And more sales is not going to fix that business owner who is barely making a profit, because they haven't learned to run a profitable business. Equally, I see businesses that have been making a certain amount of profit. Let's stick with the numbers. Let's say they're at 200,000 and they're making 50,000 a year profit. They double the business in size and they're still making 50,000 pounds a year profit. And you think to yourself, well, what's the point of all this extra work and effort and stress and risk that you putting on yourself to double the size of your business if the profits are still the same? Okay, yes, we do need to think about, like, what are your longer term plans? Maybe some people are building a business to be able to sell in the future. But even then, I would argue that you should still be maintaining healthy profit margins, because anyone that you sell it to they don't want just ton like this. No one wants to buy £1 million turnover business that is hardly making any profits. You are going to get paid far more for your business if you can maintain a healthy level of profitability. So that's what I want you to take away from this, is that if your sales that you are making in a typical 12-month window of time, so a typical year, is 50,000 or more, you should be making a profit, a healthy, consistent profit. Okay, and actually we can go a layer deeper, because often people ask me, well, for tax planning purposes, I'm not putting my salary through, or I am putting my salary through. What should I do with that? Here is the truth. Your business should be profitable after you take into account the time that you are spending on the business as a business owner and a market-related pay. So look at what your business's level of profitability is before any expenses or money that you take out. Get that number. And then deduct a market-related salary for the work you're doing. And your business should still be making profit after paying you a market-related salary. If it's not, you're not running a business, you're running a job for yourself. Okay, because if the only thing your business can pay is your market-related pay and there's nothing left over, you haven't got a business. Because a true business generates profits over and above paying people for the work they do within the business. A true business generates profits for the owners of that business without them needing to work in it, in a sense, should I say it that way? Does that make sense? So, like, if you as the business owner could go out and recruit someone to do the work you do and step away, so you would have to pay someone's salary, there should still be money left over as profit for you to take into account the fact that you are taking this risk as a business owner. Okay, there should be a reward for the risk that you take for running a business over and above just compensating your market-related salary. And you need to keep that in mind, because I think a lot of people don't think about that. Okay, so I'm going to summarize that again, because you can do it in your accounting software like Xero or QuickBooks. You can customize the report to show you this. So what you want to do is you want to run your profit and loss, and your profit and loss is just your sales or revenue or turnover less your costs. Okay, the costs are grouped in a certain way, but that's essentially what it's doing to give you your profit, and then at the bottom it'll tell you tax, etc. So I want to really focus on that top bit. I want you to go through your profit and loss report and customize it and look at every single line item of your expenses and drag any expenses that are specifically to you, so like director's salary, or maybe you have a vehicle through the company that's only for you, or something like that. Anything that's just purely for you, for tax planning purposes, not actually needed for running the business. And like maybe you want to export this to an Excel spreadsheet and take those expenses and remove them from the business expenses, so that you're left with a profit purely down to running the business. And so you'll have your sales less your costs give you a profit. Okay, if you're keeping up with me so far. Only after taking into account expenses that are required to run the business, not expenses that you've put through for tax planning. Now, what I then want you to do is ask yourself, how much time per week are you spending on average running your business? Is it equivalent to a full-time role, or are you working 70-hour weeks? Be honest here. Are you only working 20-hour weeks, so part-time role? Be really brutally honest, because this is for your benefit. Go and then look for a typical market-related pay. for the work you do. Might be a combination of roles. And then from that profit you've calculated in that spreadsheet or in your software, deduct that market-related pay for the amount of time you're working. And there should be profit left over, okay? The level of profitability will depend on your industry. A rough benchmark is at least 10%. If you're less than 10% profit after taking into account a market-related pay for you, and this is profit before tax, then there's some work to be done. And no, like I said, making more sales and more revenue is not going to fix that. You need to understand, based on your current level of sales, why your profit after paying yourself a market-related pay is less than 10%. Get to the bottom of that before you think sell, sell, sell. Because if you can get to the bottom of that, when you sell, 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 you can actually make more money. Because what you want to see is if you bring in 100 pounds of sales, you don't want to only be left with 2 pounds at the end. Who wants to be left with 2 pounds from 100 pounds of sales? No. You want to make sure that if you go out there and win another 100 pounds or $100 of sales, that you are seeing 20 of that left over at least. Okay? That is why thinking that your profit problem is going to be solved if you make more sales is a bad mindset to have. You need to get down into the nitty-gritty of the underlying problem of why you're not profitable at your current level of operations before you try and grow or double your business. Okay, hopefully you found this useful. I am going to be releasing more content along these lines, so some Xero specifics thrown in there, but generally focusing on helping businesses be more profitable and slowly digging deeper and deeper into more of a niche space with the industry I told you about, which is digital course creators. But thank you for listening. Hopefully you found this useful. Please do comment below if you have any questions on anything that I explained in this video, or if you have any questions on a topic you would love me to cover in a future video. Cheers.